Hello, everybody. Happy November. Welcome back to another weekly market review for F45 trading. This week, of course, we will be discussing the very first week of November, November 2nd to the 6th. And of course, after much due anticipation, we are finally going to see the results of the U.S. election and finally, hopefully, fingers crossed, get out of this consolidation pattern that we've been in Forex for the past little while and start to see some trending markets. So just as a word of caution before I even get into this, I am absolutely not calling anything this week. I am not trading any live funds. I really hope you guys aren't either. I haven't for the entire month of October, and for good reason. The markets have been very, very brutal. And to be honest with you, I mean, you may have got lucky once or twice here or there, but for the most part, it would have been probably a disaster. So I didn't partake at all, which you could probably obviously tell from my reviews. They are pretty general. But nonetheless, if you ever wanted to stay out of the markets for a week, it's this upcoming week. And I'm going to direct your attention very quickly over to the economic news calendar here. Monday starts off relatively quiet, with the exception of the Australian dollar. We've got the rate statement. Looks like they are planning on dropping the interest rates for the Aussie, so expect some pretty significant movement there going into tomorrow. Again, at the time of this recording, it's obviously just pre-London midnight, so Sunday has opened up. The Asian session has begun trading, and we'll talk about that here in a minute. But don't forget about this one here, Australian dollar. We are going to see some movement on that pair, leading us into Tuesday, which is, of course, the presidential election. So I would imagine we're going to probably see some pretty significant whipsaw. And I'll just direct you to last U.S. election 2016. If you want to see what the markets did after that occurred, then you can kind of get an idea as to, I think, what we can expect. However, you know, without having a crystal ball in my hand, I obviously wouldn't be able to tell you if it's going to go higher or lower, but I'm expecting some pretty significant volatility. Going into Wednesday, pretty quiet day for Wednesday. We've got some ISM news coming out and some ADP non-farm employment change for the dollar. So Wednesday should be moving pretty good after the election results. I think the election, if I'm not mistaken, is called later in the evening. So then obviously New York Open, price is probably going to go ballistic. Going into Thursday, and we've got some pretty heavy economic news on Thursday. We've got pound sterling with the monetary policy reports, and it doesn't look like they're forecasting any change in the interest rate over there. Nonetheless, we're going to see some pretty significant movement on GBP as well. We've got unemployment claims for the dollar, and then we've got FOMC statement and the U.S. dollar interest rate decision. Again, looking like they're keeping it about a quarter basis point, not much changing there. They could surprise us, though, but I think the biggest surprise is going to be up into here on Tuesday. And then we've got FOMC press conference and a whole bunch of crazy stuff happening on Thursday. And then Friday, again, another very heavily volatile day. We've obviously got NFP coming out, and some Canadian dollar employment and unemployment rates, et cetera, et cetera. Nonetheless, all of this boiling down, it's going to be a crazy, volatile week. Stay out of the markets, folks. Go to cash. Don't trade live funds, whatever you do. I'm going to talk about this here very, very quickly. I'm going to whip through these. I'll be about 5 minutes, and then I'm going to wrap this up because I'm waiting for Tuesday, and then from there, then we can better assess what we have to work with from there, that range. So last week I mentioned to you guys that I was looking to see price push above these highs in here. In my opinion, we had a stop rate lower, and that was enough for me. Once we cleared these lows under here, we got a consolidation, and then, as I said, if price stays below Friday, we'll probably chop sideways and possibly make another low. But if we break above the high on Friday, which was this candle right here, the week previous, obviously, then we were going to see a run up to here, and that's exactly what we got. We saw price actually push up into there last Thursday, and then Friday was kind of an inside trading range, but nice weekly range to the upside. Almost got the level that I was looking for. I'm still looking for that to get tagged out, about another 20 pips or so in US dollar. I would imagine we're probably going to punch up into that range here, I would imagine, tomorrow, going into Monday, if not certainly Tuesday. And we'll see what happens from there. I've got a lot of interest in the markets back into this trading range right here. I'm going to drop a level on here. I want to see if they have enough mustard to get up to 95.80 levels. And where we go from there, I don't know. Do we make an attempt to get above here, or does it jam up into there, reverse? Does it shoot back down into this range in here? This is the other thing that could happen on Tuesday. They could come and slam back down into this range in here and then make a bounce higher. Or if we clear this low, this is really it here, folks. This is the crux of it. If we clear this low here, we're going to go below this low here, and then we're going to probably start to tap back down into this consolidated area back here from 2018. Okay, very simple. If we go above this red line here, I think there's a chance we could get back above this range back in here, and then possibly, like I say, maybe get back into this consolidated range back in here from early 2000, earlier this year, I guess. Okay, so that's really about it, but I'm expecting the 94.30 level to get hit, possibly down here. Watch this low here, watch this high, and this guy right there. Okay, that's really about all I got on the dollar. EurUsd, again, we've made that break below, obviously, after clearing these here. I was actually hoping that the EurUsd would have cleared these highs a little bit more significantly, kind of what the US dollar had done. We really aggressively cleared these lows here, but we left all of these highs in here relatively intact, albeit for a couple of them right here. Nonetheless, ran the liquidity above and then sharp, steep trade lower. I think we're easily going to take out this guy here. And my target on this week on Euro is 1470 levels down in here, about this red line. And I think it's going to trade down there fairly easily once we break through this level here. And again, watch to see if, and again, study, don't trade, but watch to see if we get a punch back higher onto Tuesday, like a whipsaw sort of thing, and then maybe a drop lower. I'm looking to see if that wants to play out. But I do believe that we're going to ultimately see price down below here before the end of the week, or the end of the month anyway, for sure. GbpUsd, I told you guys, this setup right here, this low, these lower lows in here, were all very, very suspect, and I thought we were going to see a breakdown below that, and that's exactly what we got. We saw Monday, Tuesday range hanging around doing nothing, and then Wednesday put in the big down day, and then Thursday sealed its fate, and then Friday again we had an inside trading range here, so not much to see there. I think this is going to continue to break to the downside. We got lots more to go on GBP. We do have a monetary policy announcement for GBP for the sterling, so keep that in mind. I kind of like, I honestly don't know what they're going to do with this pair. They've really been holding it in a pretty tight consolidation for the past few months, and so this one could really see some ranges get made this week. So just watch out for this one. To be honest with you, if the US dollar does push higher, it should drop cable lower, and in which case we could get back down into this trading range, back down in here, which is what I've been looking for a little while, which would take us underneath this low here. So we'll see how that plays out. In my opinion, though, we drove up, we created a big area of buy stops above the market here, which we drove through once, came back down, failed to go any lower, and then drove through it again here. So in my opinion, there really isn't any need to take this thing higher. If they did break this high here, I think it would only be just to ultimately break higher, and then we could eventually start to clear up these two equal highs above here, and then possibly start to work up into this range. But I think there's a very good chance if the dollar does continue to run higher, that we'll probably see lower prices on cable. All of these lows in here, as you can see, they didn't have a single stop run on any of these lows. And in my opinion, I think they're all going to be in danger of getting run, and possibly even this low here. So I'm looking to see if we'll get down to this area on cable, but I think the work on the dirty work on the upside has been done, and I think it's now going to start falling lower. Euro GBP hasn't been giving me a good clear signal, other than it's working in this tight channel to the downside. We had a very brief pop above, running all the stops here, but nonetheless continued in its downward fashion for the rest of the week last week. Very short, tight, choppy ranges, and again, they're not doing anything with this pair because they're going to be manipulating EurUsd and GbpUsd in some pretty big numbers. So watch out for these two pairs because I think they're going to see some movement. Aussie, I said these two levels here and here. I haven't touched these charts since I called these levels last week, by the way. Everything's the exact same. You can go to my last week's video and you can see everything's the same. I'm still calling these lows here on Aussie. I'm going to drag this out to the downside. That's where I think this is going to go. And then if we get through this range here, watch out for where this red line is here at 66.80, 66.90. That level in there. I think there's a chance we could get all the way down to there. And again, Aussie's dropping its interest rate. They're lowering it by a basis point, so a tenth of a basis point, excuse me. So just watch for that. I think that's going to lead to weakness on Aussie, and we'll probably see Aussie push down in here. But we do have some very, very nice, clean highs above here. They could whipsaw this thing, shoot this thing up, and then reverse it. I mean, it's going to get crazy this week, folks, so expect the unexpected. But I think we're going to have lower prices on Aussie. USCAD is making the run for the levels that I called last week as well, too. I want to see them punch above these highs here. We're doing that in pretty short order, albeit, though, Thursday we had a nice up candle, but ended up closing on a doji on the day, and then, again, Friday had an inside trading range. I can zoom in on this for you a little bit better. Inside trading range Friday, and then now we're starting out of the gate fairly aggressive on Sunday, Monday open here. I'd like to see this actually, again, very similar to Euro, drop down into this pocket range into here and then try to punch for these highs. That's what I'd like to see. In order to get something like that to happen, obviously US dollar would have to do something similar, drop down into this range and then punch. So like I was saying, just watch for that movement. And I think it'll be a rapid one. It'll probably just be a quick Tuesday down and then a big long wick on the daily and then a big punch up higher is I think what's probably going to happen. It's just sort of going to be a fake out move to start off the week. So just, I shouldn't say start off the week. That'll probably happen after the election, so going into Wednesday. And that's it for Forex, folks. Watch yourself this week. Like I said, crude oil, I'm going to wrap this up with, is dropping. As I said a million times, watch out for crude oil. The bulls are going to start getting hammered here. I've been calling lower prices on crude oil ever since we started to get back up into this range here, which was in here. So since pretty much about June, I said, watch out because it's going to start going lower. And it did absolutely nothing for 2 months, dropped a little bit, and then did absolutely nothing for 2 months. And then now we're finally starting to see another break in market structure to the downside. So again, I think we're going to hit under sub 30. That's coming. Zoom in a little bit here. We had a big sell-off to open up the weekly range here, and it's trying to make up for lost ground, but it looks like it's having a hard time. So watch this low here, which also coincides with the body low of Friday's close. Watch that level there to see if it wants to push up through that at all. If it does, it may want to come up and clean in this range in here and possibly retag back into this level, the lows of these candles here, and then possibly fall off. I don't think it needs to trade all the way back up into this range and rebalance, kind of like how we had this candle here shoot up. That was the sell right there, by the way, folks. If you were selling crude oil, which I told you, don't sell crude oil, don't touch crude oil, I would definitely leave this market alone because it can get pretty crazy, obviously, which was evident earlier this year. But I'm expecting crude oil to be sub 30s, probably within the next couple of weeks for sure. Crude oil, again, seasonally speaking, is very, very bearish towards the end of the year, and it doesn't start picking up momentum to the upside on the bullish side until the first quarter of next year. So I don't think there's going to be any talk of any bullish activity on crude oil other than a brief retrace higher into a lower downtrend is really all I think we're going to get. Is it going to be a straight shot down? I don't think so. But I think they're definitely going to be, I think the move is in. I think the market structure has broke here, obviously, last week, and any move to the upside, I think, would just be picking up short positions just to drop into it again. So that's it for crude. Unfortunately, I don't have anything for you for gold, guys. I said watch this level on gold. I'm going to extend this out. I think these lows here are going to be suspect. I think we're going to see gold under 1,800 this week. Probably this month for sure. We'll see what happens once it slams back into this range in here and see how bullish it wants to continue from there. But I don't think we're going to see higher prices in gold yet. And I use that term yet to let you know that I honestly believe we're going to see much, much higher prices in gold. Look at all these highs. Beautiful high. Perfect intact high here, 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 all through here, in through here, and right here. Beautiful highs just waiting. Everybody's short gold. Everybody who's institutional is short gold. And eventually I think they're going to, or commercial, I'm sorry. Retail. Jesus. Get my words straight here. Everyone who's retail is short, trying to capitalize on this downtrend and this movement down to sub 1800s, and I think they're gonna hit those guys here. Whether they hit them first before they drop down in here, or whether they just drop down, is two different things. We're gonna have to wait and see. But nonetheless, I am definitely gonna expect lower prices on gold for the next little while. Okay. That's about it. Lastly, just very, very quickly, and then we're going to close this. My level on S&P was hit very handsomely last week. I told you we were trading up here last week, and I said I like this 32.86 level. It hit that very easily last week, so this range here is complete. Check. And I don't know what's going to happen next on this pair, and I'll just get you to go ahead, check out this area here. This has got some area of interest. We're going to see some whipsaw, and again, just real briefly here, I'm going to go out to the weekly, guys. Look what happened last 2016, last election. Market sold off right here in that election. Big down candle, swept all the lows, and then we had the biggest tear bullish market in S&P in almost its history. And we've seen some obviously major repricing in here. But nonetheless, I think we're going to be in for a bit of a ride here this week. So, you know, indices, Forex, commodities, equities, stay out of it all, folks. Go to cash, sit sideways, and just wait until this week is over. And but study and learn and watch what price is doing, because I think there's going to be a whole lot of lessons to be learned this week. So thanks for watching, guys. I will catch up to you next week. For all my members, I'll see you in the chat room tomorrow, as always. Take care.